Good morning. Welcome back here to Trader Minute. Great to have you aboard. Market futures have been pretty stuck here since yesterday's kind of pop and drop. We've seen futures just kind of grind along this kind of 29.20 to 29.30 level. Just not a whole lot in them. You compare today's volumes this morning to yesterday's volumes. There's a saying in Spanish, "Nada que ver." They don't even come close. To being comparable. And what's going on? Market's on hold ahead of the Fed. And yeah, there's some stocks going up a little, some stocks going down a little. But for the most part, most stocks are not making very significant moves when it comes down to it. As the just kind of this wait and see for the Fed, is coming here today. Now, there are a lot of things I want to go out and take a look at here with you. We'll have to make a change here to CSX, and so we'll do that here in 4 minutes. But I want to make some comments on the Fed here today. And there's a lot of information out there about the Fed right now, and opinion about the Fed and what the Fed may or may not do. And there are very, very smart people who have very differing opinions, right? So this isn't something where, there are two games you can play when it comes to the Fed. You play the prediction game, right? And that's what you're going to see in the media. You're going to see the prediction game. Well, what's going to happen? What's going to happen to this? What's going to happen to that? If the Fed does this, then what's going to happen? Well, I think the Fed's going to do this, right? It's a prediction game. Most of the predictors aren't traders. Right? Most of the predictors just simply aren't traders. They're trying to predict the Fed, and then the next day they get an article written, "Hey, so-and-so called the Fed, blah, blah, blah." Okay, great. Right? That's out there. It's all over the place right now, and it normally is around this time, right? That's nothing unusual, nothing new. But generally when it comes to the Fed, it's more about reacting, not predicting. Because when we see a Fed reaction, most times what we will see is we will see the market make a move, right? Let's just say the market shoots down, and at some point within the next hour, market's right back to where it was before the Fed. That is almost always the case. Now, it's not always the case, but it's almost always the case. Is that going to happen this time? It could, it may not, but that's the norm. And it becomes from that point of saying, okay, how do you want to react? And sometimes, it's prudent to wait. Sometimes you don't get a very predictable type of reaction. Sometimes you get a reaction range high and low, and then you break that range, and okay, there's something to go on. But after the Fed, the number of opinions out there are going to be just as many as they are before the Fed. And it's about reacting, following what the price action gives, and reacting here to it. Now, in terms of the challenge and how the challenge is going to react to the Fed, the challenge doesn't care about the Fed. There is nothing in the challenge that gives one iota about the Fed. It didn't care about, U.S.-Mexico trade. It didn't care about U.S.-China. It didn't care about the market vibe. It didn't care about any of that nonsense. And it won't. It won't going forward. So there is no kind of difference in functioning with the challenge today as there would be on any other day. And so it'll be, same process as usual. So let's go get to that process here. We have two trades on the board, Boeing and CSX. Now, yesterday we pulled off a good chunk of Boeing and kind of banked that, and running with what we continued with yesterday, and then CSX. Let's start with CSX. Stock exit level 76.78. And CSX right now is sitting at 76.67. So it's below our stop area, and so it is time to go. So I'm going to pull off this CSX position. And this isn't something where it's, oh, well, do you think it's going higher or lower? No, this is part of the process, and I have to pull it off, right? It doesn't matter how much I may like it or may want to hold it or any of that. I have to take it off. And 194 is my fill price. So I'm out of CSX at 194. Okay. So let me make sure the alert goes out on that. There we go. And then we will update the spreadsheet here, 194. And the exit date here, 6:19 a.m. And trade is closed. This is our first trade where we've been stopped out on the price stop here this challenge. This is the first time. And, it's never any fun. It just isn't fun. But it's part of the process. And I expect out of 10 trades that, 3 of them get stopped out. That's just what I expect that we will see. So to get 1 in 10, I'll take it. But, it doesn't make it feel any better there. And then Boeing. In Boeing, there's nothing to adjust here. But let me fill in the option price here, $12.60 there on the option. So Boeing is, down $30 from, kind of that semi-reentry from yesterday. So yeah, there we are. Puts the challenge here just shy of 12,000. Yeah, just running with Boeing with about $2,500. So plenty of cash to run with things. And, that is not because of the Fed. That is just simply because of the lack of signals. And this morning, there are no new signals on the board. We have a few crossovers, things like Target, downside crossover. Things like Vulcan Materials with a downside crossover today, but they're nowhere even close to signaling bearish here on for the algorithm as they're coming off their highs. Vulcan has a chance because it does have a little bit of a lower high in it, and some nasty negative divergences in some of the indicators. But things like Target. Just no chance, right? It's off its highs, yeah, a little bit. This isn't brand new downside trend territory. This is consolidation territory here for it. So no new signals on the board this morning. I'm not too surprised. I think one of the things we will see ahead of major events going forward, because we've seen it a lot in the past, is ahead of a major event, it'll either be devoid of signals or it'll be a highly active signal period. This one's a little more devoid of signal, but that won't be the case for all of them. We'll see how things change and how things adjust here this afternoon. All right, so that's the challenge. That's where it's sitting, and going to go into obviously the Fed here with that, and we'll react to the next signals that come. We have plenty of cash to do that here. Okay, alrighty. Couple things I want to speak to, and most of these deal with questions that have come in over the last 24 hours, or comments made to me over the last 24 hours, and where I take notes and I say, this is something that, I should share with the community or discuss with the community, as I know there are probably others kind of wondering something similar, and so some of it will be that. And others just, more commentary and training on how this process works, because it is a new process for the challenge. It's one where we've talked extensively about how it works, how it's operated. We've now been operating it for a couple months. It's something that I hope you're seeing the simplicity behind it, where, I don't have to repeat things, nearly as much, but I'm always happy to and always will as they come up. But we got to keep in mind this challenge and the development behind it. It's been a long-term process. And it was something where we took and working on KD signals, right? And where I used to share a lot of the KD signals, and we put them on the site. It wasn't financially viable for us to continue to do the site, but it was financially viable to continue to go with the KD signals because of how effective they were. But they needed some tweaking. They needed some tweaking to be applicable to the challenge, because as they were simply stock signals. And when we come to the challenge, now we have options. We don't just say, oh, well, we get a stock signal, so let's go buy an option. It doesn't work that way. It just is, it just doesn't. It doesn't function that way for a number of reasons. And we can get a signal, for example, a signal on Triple D, right? Triple D go our way for a day. All right, 2 days later, it pops up just a little bit. And, okay, the stock's lower than where we got in, but our option value is also 60% lower on the puts, right? Where we can lose a big chunk even though we were right on the stock. When it comes to applying options, that is one of the big risks that's out there, and that won't go away. That will be a consistent risk over time. And so the signals had to be tweaked a little, had to be altered a little. Had to test out a few other mechanisms to kind of put into it in order to make them viable for the challenge. And we were able to do that, and able to kind of see it working for a longer period of time, see it working in real time. And I wasn't quite finished with some of the things I wanted to test out when I rolled it out, our test version back in April. But, it was ready to go fully here to go live here in May, and that's what we have done. And I understand there's a learning process here to it. But one thing to keep in mind, this isn't something that is, just coming and then, going away anytime soon. It is not something where its viability going forward depends on the absolute result of this challenge, right? This is something that was built with the idea of, there are going to be challenges that still go to zero. Like, that's going to be a risk. I don't want to take that risk out. That risk needs to be there to have the upside, right? And, a lot of challenges are going to end somewhere between 10,000 and 100,000. That's where most challenges are gonna end, and that's okay with me. That's fine with me. To go and to create an automated system that just goes to 100,000 every time. I don't think that's very realistic, right? And that's just not something that that I even really attempt to do. But to have something more consistent than Jeff's trades, absolutely. And so while these are made with some of my methodologies and, they've been created by me, it's a system that I run, but it's not dependent on me. Meaning anyone could come to my office, I could sit down with you for a day, show you how it all works, and you could go and run it if you had the algorithm. And that was important to me because of a major factor. And yesterday, one of you sent over to me after my afternoon video and said, Jeff, you had a little more excitement in that video than I've heard from you in a while. And I kind of chuckled. And I said, yeah, you're right. I said, yeah, you're right. And it's one of those things where, absolutely. And I was excited. Not because of Boeing. Not because of the trade. Not because of any one particular thing, but because there's a system and a process that I have a long-term vision for Trader Minute, for a smaller group of people that I strongly believe can be very effective going forward. And it's not dependent on, oh, well, we just had a few good trades. Okay, Jeff, what's the next trade? Right? It's not more pressure on me. It's actually less pressure. It's okay. I'll wait till the algo spits it out, and I'll go operate it, right? And if the stock goes up or down, great. I know how I'm going to react. I know what's going to happen, right? And so those emotions of excitement or disappointment and those types of things that I've spent years just trying to say, okay, I've got to be very even keeled because I'm presenting to a community. I can't let emotions dictate trades, which I never really have, but I can't even bring too much emotion to the table because that will affect how other people, kind of deal with, certain trades. I don't have to worry about that anymore. I don't have to worry about it. My emotions don't affect the trades at all in any way, shape, or form. So my excitement, my disappointment, my aggravation, right, kind of irritated at CSX. In fact, CSX was kind of funny this morning. It was down 70 cents. And I looked at my brother and I said, man, I wish the thing would just go down 30 more cents, get me out, and we can move on. And, that's I probably shouldn't admit that or anything else, but I don't have a decision to make, right? And so being able to kind of share in some of those trading emotions again feels really nice. Feels really good, and something you'll hear from me, as we go forward. And they do not affect the decisions that are being made, but, you hear a lot. People talk and they say, well, in trading, you got to get rid of emotion. Number one rule of trading, you got to get rid of emotion. I've never found anybody who can do it 100%, right? It doesn't happen. And there are good things and there are bad things that can come from emotions, but we're humans and emotions happen. But emotions can't dictate the trade decisions. And as long as they don't dictate the trade decisions, you will hear them from me. So you'll hear excitement when things are working. You'll hear some disappointment when they're not. But overall, long term, this was built to survive the chop, thrive in the trend, and to be sustainable for a long period of time. It has a couple drawbacks. Drawback number one, it doesn't optimize every trade. It optimizes a basket of trades. It doesn't optimize every single trade. It's much easier or it's been much more legitimate to try to maximize a basket of trades than to take each and every individual trade and say, how can we maximize this trade? Also, we don't need to maximize every trade to be very successful here with it. So that's one of the drawbacks. We've talked about that before, how, the challenge of the way that it's built, it's going to frustrate people that want tops and bottoms and want to micromanage every little trade. It just isn't, that's not built into this. And it won't be because it's not needed, and it's something that I think ultimately would be a drawback and not a positive here for it. Okay. Sorry about that. I saw something out of the corner of my eye on my other screen and lost my train of thought here. So my apologies there. But anyway, that's going to be one of the drawbacks here to it. The other drawback to the challenge in this format is the number of people that it can have on and following and doing. It is a limited group. It is something that ultimately puts a cap on Trader Minute, and that is something I'm more than okay, more than fine with, and that is going to be one of the drawbacks here as we go forward. But outside of that, to me, as I look at it and as I've kind of put it together, as I've talked to several of you out there, it is something where the positives far outweigh the negatives, and we'll continue here with that. One thing that has happened over the years that the challenge kind of takes away a little bit is this kind of idea of Boeing makes a big move yesterday, right? Makes a big move. And I got an email yesterday, kind of about an hour before I got on video and made the trade changes to Boeing. He said, Jeff, what do you think Boeing's going to do tomorrow? And my response was simple. It was, I'm sorry. I don't have a crystal ball. I don't know. I mean, anything I say is just going to be a guess. There's nothing in the algorithm that says, hey, this is what it's going to do tomorrow. This is what it's going to do this is what it's going to do in the morning. This is what it's going to do in the afternoon, or anything of that nature. I've played around. I'm testing various things as far as trend reentry, right? Because if you take a look at something like Boeing back here in January, there never was a signal here for this entire rally. We had the 3-7 crossover right back here, which wasn't a bullish signal, but ultimately a trend emerged. But there was never a pullback that was significant enough to create any sort of re-entry to the upside on it. And so one of the things I've been working on is finding something that can get some sort of re-entry into these types of trends. And frankly, I haven't found anything that I find to be effective. In fact, there's nothing that I've done, nothing that I've tested, nothing I've looked at that has any type of different odds than what the original signal had. Yeah, sometimes it's a re-entry and it works, and sometimes it's a re-entry and it doesn't. It does look like, overall that some of the re-entries, the reward is greater than the risk, but it's nowhere near what the risk-reward kind of ratio is for origination kind of entry signals, like what we saw for Boeing on Monday, for example. And so it's not something that's probably coming anytime soon, and it may never come. It's just one of those things where if I'm able to figure it out, great. If I can't, fine. It's something I can figure out from a stock standpoint, but taking it and applying it from a stock standpoint to an option to the challenge standpoint, that's where the big challenge lies. And so, we don't need it for the challenge to be successful. It's not something that has to be there. But one of the reasons I look for it is because I know that, in the community, things happen. And, sometimes even though now, okay, everybody knows what time the trades are going to be made, there's real life, and real life happens, and sometimes you can't make a trade, and, you start to see it, and it kind of takes off, and the price isn't anywhere near the next time you see it, and it's, should I get in? Should I not? What should I do here? What should I do not? And, that is something that I can't answer very well because, for example, Boeing at the close yesterday, it's a very different beast than Boeing on the entry right here. Right? It's just a very different beast in terms of predictability. Now, what do I know? I know that the probability is greater that Boeing will move another 2 average true ranges. That's what I know. But one of the things that will happen is that price stability after a 2 average true range move, price stability of a stock will decrease dramatically. The fluctuations will get significantly greater after a 2 average true range move. For example, just look at Boeing right here. It gaps down well over 2 average true ranges. Look at the price stability. You know what? It gaps down, it sells off, and then it rallies $15-20, and then it gaps down $15. Then it sells off, and then it rallies on back, and then it goes to a new low, and then it pops on back. The price stability just isn't there, right? Directionally, path of least resistance is there, but price stability isn't there. And that's one of the things that will happen once a stock moves 2 average true ranges. And that's where some of the real difficulty lies in applying the challenge methodology to new entries after a 2 average true range move. It works fine for hey, you know what? We've made a challenge trade. We have gains. Okay, we know the odds are in our favor. So great, we can ride some of this variance and some of this, lack of price stability, right? Because we're essentially just, peeling off a little bit of the position. But in terms of, setting up a new position or something like that in this area, the price stability just isn't very good. So to get something consistent has been very difficult and not something that, I've had very much success with. And yes, success from time to time here and there, but nothing on a consistent basis that, that has been a repeatable process, like what the original algorithm signals are here. But that price stability is a very big thing, right? And there's nothing about the algorithm here that makes predictions. It's all about odds in, what are the odds? Are the odds in the favor? Are they not? because we know what? We know anything could happen, right? We absolutely know anything can happen. One of the best trades I ever probably had on the board was Boeing years ago. And man, the stock starts working. It's a great setup, high probability, great candle, great action. Everything looks great. It's set up, it's ready to go. Boom, I'm going to make a mint on this trade. And I turn on CNBC, and there they have a picture of Heathrow Airport. And there's the Boeing Dreamliner in flames. And what does the stock do? Boom. It tanks. Something new happened, right? Something different happened. Something changed. There was a variable that came in that changed. And we know that, that is possible at all times. And so the algorithm is not looking and trying to predict. The algorithm is looking and saying, okay, are the odds in favor of a strong trend right here? CSX, the odds are in favor of a strong trend right here. The odds suggest a strong trend is coming here on CSX. We had the 3-7 crossover to the upside yesterday, so suggest, okay, probably here to the upside. But once it moves outside of that range, the odds change. Not the odds for trend, but we can no longer look at it and say, hey, the upside odds are greater than the downside odds. And so that's time to back out, move on, next, wait for the next signal to come in. And look, we could see a signal come in on CSX again tomorrow, right? It could happen that fast. We've seen that before, where it's just kind of a little whipsaw and then go. And, if that happens, we'll run with that and trade that. The last thing I want to comment on are the actions that are taken when it comes to the different trades. The challenge is no longer in this position of, Jeff's going to do what Jeff's going to do, and we don't know when Jeff's going to do it, and, Jeff's just going to react to what he sees, and a trade could come out at any time. While, yes, I reserve the right for all of that, that's not that's not going to be the norm. That's not what we're going to see most times. Most trades are going to be made at the 10:30 in the morning, 2:30 in the afternoon time period, with a few minor exceptions. And when we have a trade on the board like Boeing, there will be a consistency of action. We're either going to peel some of the position off and hold the rest, or we're going to peel all the position off and add back into it to get the right allocation. Those are the two options, right? And so hopefully as we go forward, and for those of you who aren't on video or aren't on, live with us at those times, you get those texts, it becomes very clear what's happening because it's one of those two scenarios. If I'm selling 100%, I'm probably getting back into some and a different option to get the allocation back in. And if I'm selling partial, boom, that's how it's adjusting there to it. After a 2 average true range move or a 3 average true range move, that can change. But just for these initial average true range moves, that's going to be the normal, the normal reaction. And hopefully here with the challenge, it starts to get a little easier to understand, okay, you know what? There's probability high that Jeff's going to make a change or not because it just comes down to the data that's here. Right? And you can see the exact same data that I have in terms of operating and executing the trade. The only thing I don't have on here is the algorithm signals and how all that works. And, I've given you a lot of that, but I'm not going to, reveal the entire algorithm and everything else as we go forward. But, the execution of the trade process, to me, it's important to be as transparent as possible with that, just to make it easier to execute or for the community to execute, the trades as they go forward and as we go forward here with them. Okay. So I appreciate the comments and the questions, that have come in. Hopefully that answers some of them, and just helps to kind of build a greater understanding of the process and how it goes and how it works. And remember, it was designed, to bring consistency. It was designed to bring, obviously gains, but designed to kind of make it a lot easier. To to take away a lot of the decision-making factors, to take away a lot of the, community angst of, oh, what goes on here or what goes on there, right? And hopefully it doesn't take away the excitement, right, of something like watching a Boeing just, take off yesterday, right? That's exciting. Great to be in those, and great to be involved with those. Under Armour was that way. It was exciting, to see that, to get into gold and to see it in the next 2 days. Boom, boom. That's exciting. That's what trading. That's what we want with trading. That's why we start to trade in the first place, is to have some of that excitement. And so the process is meant to be very simple, to be able to bring some of that in, and at the same time be able to handle something like a CSX very effectively, and just say, look, okay, boom, there it is, done, next, move on, out, gone. Wait for the next setup. And if CSX goes up from here, fine. If it goes down from here, fine. It's not something that has to be, oh man, we got out and now it went up. What should we learn from that? It's not meant to be taking lessons out of everything and to be teaching all these things. It's meant to be a real-time trade mechanism, a real-time trade process to deliver on the bottom line. And, that's what I'm looking forward to do for years to come. Thanks for hopping on. Have yourselves a fantastic day. We'll talk to you this afternoon. Take care.